Hey, what's up, guys? Little man with a big opinion here. Today's stock that I'm going to talk about is ticker symbol AGNC or AGNC Investment. This is, in my opinion, a relatively safe monthly dividend stock to invest in. It has a very low entry level. And what I mean by that is it's a $13 stock, whereas, Microsoft is over $100, or, Google is in the $1,000. They got a comma in their stock. AGNC, like several of the other stocks in my portfolio, is a REIT, REIT, or a real estate investment trust company. Essentially, they are someone that has money that can lend it out for mortgages and other things, and they make their money off of the interest rate that is a part of the deals and the contracts that they make with different people. Last time I looked, they were just shy of so they're just above a $7 billion market cap, and their current dividend is about an 11%. It's a little bit higher because of how deep of a decline the company has taken. Every stock has declined drastically because of the coronavirus. So I think now is a perfect time to start buying into some of these companies. For instance, I bought my 3 shares at $12.50, and they're sitting at $13.17. So I've gained $2.02 so far, or a 5% increase. I believe we're past the point of seeing stocks just plummet, tumble, go drastically down. Like, if we look at their 3-month chart, they're down 30%. They were just shy of $20, sitting at like the $18, $19 range. And in the past, that's about what I've bought it at. Anywhere between $16.50 and like $21 is what I've bought this company at before. For them to get out of paying taxes, they have to pay out at least 90% of their income to their shareholders. And they get special tax write-offs, and they don't have to pay anywhere near as much. And so as a monthly dividend company, they're always going to have a monthly dividend because they need to pay out 90%, or they need to start paying taxes. And I don't think they want to start paying taxes. A fairly young company. They've only been around for 12 years. And I think their dividend has leveled out. Scrolling up here, even analysis, or an analyst, not analysis, yeah. They're saying, I think you should start buying this company. I've never really, counted what Robinhood analysis say about whether or not you should or shouldn't buy a stock company. I normally look at their dividend. I look at their payout ratio, and then I'll go through and I'll look at 3 or 4 of their quarterly earnings, like their last 3 or 4 quarterly earnings reports. And with companies like this, they are a little bit more work because you need to keep up with that. Because I guarantee you, I listened to it. Their first quarter earnings were down drastically. There's a pandemic going on. There still is. I believe their second quarter might go up a little bit, but it's not going to be amazing. Third quarter, we might be seeing an increase, and fourth quarter, hopefully things will start to not quite level out, but at least get to the point where they're going to, you can see in their increase, that they're going back to their normal levels. But if you want to buy this company at a 30%, market, cut, then I think now's the perfect time. It's a great monthly dividend stock company, and being just barely in the double digits in their dividend, and being able to maintain it for, they don't have a long track history of maintaining it, but they're building it. It's definitely a medium risk company that I'm putting my money into, and I will continue to put my money into. So with that being said, I don't have anything else I can say about this company. I'd put them, if we're going off of my own rating, a medium risk, medium reward, or maybe medium risk, medium high reward. Definitely something that if you want to risk your own money with your own conscious decision, go for it. Talk with financial advisors, talk with family, other people that have made investments before. Don't just use what I'm saying to determine whether or not you want to pick this company. And I don't have anything else to say for you guys. It speaks for itself. And on top of, I guess I had one more thing to say. All right. On top of a double-digit monthly dividend, you're buying it at about a 30% loss. Eventually, this company is going to go back to its, normal value. And so, if you put in, if your $100 investment increases by 30%, then you made $30. Quick math. All right. I don't have anything else for you guys. I'll catch you next time. Happy investing. Peace.